Hi, this is Dustin with Dustin's Dollars. Today I'm going to be talking about Bed Bath & Beyond. Now that Ryan Cohen has sold all of his shares, momentum seems to have been cut in its tracks. I'm going to talk about, is the squeeze over? Is it likely? What impact does this have? And also I'm going to go through just briefly sort of what's happened this week to lead up to this particular point. Before I begin, let me remind you that I am not a financial advisor or a financial professional of any sort. All opinions that I express in this video are mine and do not represent those of any company or any other individual. I currently do not hold any position in Bed Bath & Beyond, so this video should be for entertainment purposes only. Because I could be wrong about everything I say in this video, you need to do your own research before making any investment decisions. And real quick, just for full transparency, I sold my shares today. I have a fairly, sorry, not fairly, a very small position, anyways. In this, just for full transparency for anybody, but I'm still watching this closely, and I'm going to talk about that today in my video. So, what's happened this week, right? So, first of all, obviously the price exploded. It closed last week around $12 or $13, which was already up quite a lot, almost triple from the lows in the $4 range. And Monday went up, Tuesday went crazy, and then we saw these highs up in the high. I think it hit $30 at one point, up up in the upper 20s, mid 20s. Things went down, and then it came back up into the the mid high 20s, and then things went back down, right? And so what actually happened here, right? So first of all, obviously retail interest exploded. People were piling into the stock. I would call it a sort of YOLO season in Wall Street bets, where people were putting money in it, kept going up. More people put money in it. That got a lot of people's attention. The hype cycle was going full steam, and what happened after that, right? Because it was just going up and up and up. People were making bank on their out of the money calls that were going in the money real quick. And it looked like we were getting that gamma ramp straight up, and people were just jumping on. And we saw this sort of top on Tuesday, and then later on it was disclosed. I believe that was on Tuesday when, let me grab it, Jake Freeman, who previously from FCM, Freeman Capital Management, Bed Bath & Beyond Holdings LLC, that he sold out of his shares on the 16th. And previously he held, I want to say, 4 or 5 million shares, a good chunk of the company. I did a video talking about that when he took his stake, and had some suggestions for the company on how they could restructure their debt to stay solvent through 2024. And so that sort of came out and sounded like, oh, well, that is, was it an explanation, let's say, for, I think this was at least, let's say, the prevailing narrative amongst a lot of retail folks. That was the reason for this drop here, right? That Jake Freeman sold out, and then people said, well, it's just sort of a temporary blip. We're still up at, $19, which is up 30% or 40% for the day. Interest continued spiking. And then there was effectively this top on Wednesday. And, what happened, and then things dropped. From when you can see from Wednesday, something happened between Wednesday and Thursday where it just went down, maybe end of day Wednesday. And what happened there, again, this is sort of my interpretation from events that happened that have been reported, reading what folks were actually thinking, or at least talking about, let's not necessarily thinking, but talking about in real time on Reddit and some other places. There was this Form 144 that was filed by Ryan Cohen, RC Ventures, with his intent to sell his stake. And so this was a lot of shares. And, you can see it right here. This filing represents the potential sale of up to, that happened, and that coincided with this particular price drop here from Wednesday into Thursday. And there's a lot of speculation about what that meant, because it wasn't clear if there was some reason for filing this other than an immediate sale of full position. It wasn't clear that this would result that Ryan Cohen was actually intending to sell the full position rather than a part of it. But now we know, today it was reported that yes, he did sell it all. He currently holds, here it is. No, that's not it. This is the updated 13D that says, nope, now he owns 0 shares. And sorry, that might be too small. I should zoom in. And it lists all of the sales, and you can see that actually he was selling on the 16th and the 17th at, what looks like basically tops of the market. So he sort of put some downward pressure on the stock at those high values, and he also sold all of his call options here. And that's what's happened today. It's kind of a bloodbath at this point, where today was the day when it was that initial Form 144 was public, and then after hours here, where you see the stock has dropped another 45%, was after it was reported that he confirmed, I should say, that Ryan Cohen actually sold out his whole position. So that's sort of my high level interpretation of what just happened. And I think there's you have to ask the question, right? Like, what's going to happen now? And the true and honest answer is that nobody knows, right? Because if you look at the facts, there's still a very high short interest in this company. Let me find it here. There are almost the short interest is still 29 million shares out of 80 million total, and there are some held a little bit by insiders and some held by institutions that probably aren't selling, right? And I did a whole prior video about what did some institutions do during the GameStop squeeze, and I think you at least saw BlackRock and Vanguard basically held their stakes throughout the whole thing. I think BlackRock sold some of it, but for the most part, they held it. There's going to be some of these other institutions that do as well, because they're holding these shares as part of some other fund or for some particular reason. And again, I'm not going to speculate too much. I would guess that Vanguard is probably very, very much on held by index funds. Same, I think BlackRock runs some very large index fund as well. I think State Street does too. And so some of those stakes you might see just shares are sitting there. Probably honestly the shares that have been given out for shorts to be able to they're loaned out at this point, because effectively these institutions have a lot of the shares that they're just going to hold no matter what, because they're holding it on behalf of some of their clients effectively. Now, again, going back to my my original thread here, that there's still a very high short interest, whether Ryan Cohen sold or not, whether Jake Freeman sold or not. And so I don't think it's a given that there is nothing, that this situation isn't going to sort of regain momentum and continue. However, it seems like, momentum today just got a huge kick, right? A huge, it got stopped pretty strongly. Like it was already stopped today with enough of the will Ryan Cohen sell, won't he? But there was at least, let's say, a reasonable suspension of disbelief, maybe I would call it that, where people who wanted to believe that effectively, this is going to sound a little funny, but the squeeze is still on, that there's still momentum gaining, and there were a number of those folks, right? And there was enough, I think, again, to hold it here in the 18s, which was still way higher than the stock has been. When in doubt, zoom out, right? You look for the past month and you see it was down the 4s and 5s, and 18 is way high. And so the stock was holding there on, again, high volume today. I think it sold, come on, zoom. Sorry, it's going super slow. Today's volume was still more than twice the amount of shares that exist for the company, so that was absolutely ridiculous. The trading volume has been crazy, but there's enough folks who at least thought, this was still happening, momentum was still building, or at least was neutral at this point. And, today after hours, we saw Ryan Cohen selling. That seemed to kill things. Now, you don't really need momentum for this to happen, right? I think the stock being at an elevated price, having a just very low liquidity to the point where there are not very many shares available. You can see the most recent update from today was there were literally 2,000 shares available short, at least per this particular exchange on the IEX, and that the fee was very high, 59%. Let's call it 60%. A lot of the shorts that were opened I had a prior I talked about this in my prior video. A lot of those shorts were opened at prices that were significantly below where the price of the stock is now. And in fact, I was saying they're significantly below as of last week's closing price. And at 18, they were way low. And paying 60% fees on top of that is, really huge. It gets very, very painful to keep that short position open. And so it's still very plausible there could be a short squeeze. And when you couple that with the out of the money options that have been purchased and the large amounts of those, you still had a powder keg, in my opinion, right? Like, just even these large shareholders selling out didn't immediately nullify the thesis. Although it clearly stopping the momentum makes it maybe a very, very long play, rather than, it requires a lot of people to just hold for a while until those short positions slowly get eaten away and they finally close them out. But who knows at this point, and the other things that are the wild cards are really the fundamental aspects about the company, right? They put out this 8K today. Basically, it didn't say a whole lot, but it did reaffirm that they're going to provide an update at the end of the month, and that they're trying, they're seeing what they can do to strengthen the balance sheet, right? Because that's the big short thesis really is the company's going to go bankrupt by 2024 when they can't pay back their debt that's due in 2024. And if the company is able to fix that, that could be a catalyst for folks who have open short positions to sell, because their next debt, their big big amount of debt that they have is not due until, I want to say, 10 more years, I think in 2034, right? And so if the company can sort of limp along for years and years and years, even if they're losing money slowly, or even just barely breaking even, right? That's not necessarily, that probably kills the original thesis for why you would open up the short position, right? Because you think they're going to go bankrupt on a sort of a fixed period of time, and that could sort of disprove that. Then the other one is, they still talked about a spin-off sale, something like to that effect, of BBBY. I think the macro environment is not as good as it was when Ryan Cohen entered in March. And I mean, if I was going to speculate a little bit as to why did he sell out at this point, it would be, he found he had a price that he liked given this current macro environment, right? Because I think the original thesis that, well, BBBY is worth billions, may not be true anymore in the current macro environment, right? Multiples have compressed just across the board, and even the very largest companies that are great companies, are down 20, 30, 40% from their highs, and that's just the macro environment that we're in. So that could have been why he sold out today. That's just mostly speculation on my part, but it's kind of my best guess. So anyways, I think any of those fundamental catalysts, right? If the company does something to basically shore up their balance sheet to make sure that they can pay off that 2024 debt, or they're able to renegotiate that, extend it to in some way, shape, or form, that could be another catalyst that could kick things back off. And again, I think there's a lot of potential here. What I'm going to be watching in the next couple of days is really what happens to all of that, all those options, right? I think there were a lot of retail folks, and I'm not going to speculate how much was retail versus how much was institutions and professionals in terms of the trading activity that has happened, but I think a lot gets attributed to retail in the sort of mainstream narrative that's not necessarily a full picture. But I think a lot of folks followed Ryan Cohen with his far out of the money options, right? With those, he had these January 2023 options at strike prices of $60, $70, and $80, right? Way far out of the money. I think you had a lot of retail folks who kind of followed along, right? They sort of said, if he thinks these are going to go in the money, sure, sounds good to me. I'm going to sort of not necessarily believe him, but I don't know if that's quite the same word. I think a lot of people trusted him, to be honest, and so they trusted both that he was not trying to deceive anybody, and that this was his. He thought that these were going to be profitable investments, and because I think also because of how he handled things with GameStop, right? If I recall correctly, I think he hi Carl, good evening. But I think back with GameStop, I think he bought the shares and then he held them, and if I recall correctly, he held them through the squeeze, the whole thing in January 2021 and even beyond, and got involved with the company and did push for fundamental changes there. And so I think you had a lot of folks who thought that he was going to do something similar here, and that he had a master plan, if you will, as to what would cause these options, these way far out of the money options in the January 2023 to eventually become profitable and potentially wildly profitable, right? And I think again, I'm going to be watching what happens with the open interest on some of these options for January 2023. I think if a lot of those stay open, you still have a large period of time during which between here and there, where if there is some fundamental catalyst and it does break the short thesis, there still could be sort of this nice gamma ramp up because of all those options that are open, because of high short interest, and a lot of folks that would just really have to buy a lot of shares in order to unwind their positions. That was everything that I basically wanted to talk through today. I guess I had a couple other things open. Carl, I see you're on the stream. Thanks for joining. I don't know if you had any questions or comments. I'm talking about Bed Bath & Beyond today. I think it still is, another thing just to look at and to think about is how much liquidity really is there, right? And I'm still watching this to see how many shares are available to short, at least per some of these sources that are available to us retail investors. And I think as far as there's not a whole lot of shares available to short, that does at least signal to me that we're still in this low liquidity environment where you could see some violent moves up or down in the stock. And here's the most updated. Again, this, I think I've mentioned in the past. This is some very helpful user who subscribes to Ortex posts this on Reddit on a daily basis after market closes, and the orange line here is their estimate of the amount of shares that are shorted, because it's really only reported officially every 2 weeks or so. But this estimate here shows the amount of short interest going up and up and up, right? Since this entire past week, that it's basically just going, like I say, it's not straight up, but it's certainly up and to the right, as they say. And I mean, that still gets us into this point where there's a lot of leverage in the system, right? And that could really that could lead to some major volatility. And so I did sell out of the small position that I had because I saw the momentum being killed. I am watching some of these indicators. I think if they don't change and they do seem like they're even tightening a bit more, I will, I have every intention of buying back in with the same, small position.